Ladies and gentlemen, good day and welcome to the PVR Inox Limited's Q1 FY2024 earnings conference call hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Ankur Periwal from Axis Capital Limited. Thank you and over to you, sir.
Thank you, Carol. Good evening, friends, and welcome to PVR Inox Limited's Q1 FY24 post-result earnings call. The call will start with a brief management discussion on the quarterly earnings performance, followed by an interactive Q&A session. PVR Inox management will be represented by Mr. Ajay Bijli, Managing Director, Mr. Sanjeev Kumar, Executive Director, Mr. Nitin Sood, Group CFO, and other senior management including Mr. Alok Tandon, Co-CEO, Central, West and East, and Mr. Gautam Datta, Co-CEO, North and South. Over to you, Mr. Bijli, for the initial comments.
Thanks very much. Dear all, I'd like to welcome you all to discuss the unaudited results for the quarter ended June 30th, 2023. I hope you've had the opportunity to review our presentation and results, which are uploaded earlier today in our company's website, as well as the stock exchange's website. Quarter 1 of this fiscal started off on a slow note due to weak content in the month of April. However, the box office picked up pace in the month of May with the success of super hits like The Kerala Story from Hindi, 2018, from Malayalam, PS2 from Tamil, and Fast X and Guardians of the Galaxy Volume 3 from Hollywood. The momentum continued in June as we recorded the highest weekend admissions of 2023, primarily attributable to the blockbuster release of Adipurush. We are witnessing a consistent month-on-month increasing trend at the box office collections. The number of Hollywood releases have significantly increased when compared to last year. Strong performance of Hollywood films, especially in urban markets and special formats like IMAX, have immensely benefited us due to our robust presence in these markets and formats. The recent success of Hollywood blockbusters like Oppenheimer, Mission Impossible, Dead Reckoning Part 1 and Barbie reaffirms our belief that audiences' enthusiasm for theatrical movie-going remains intact when there is compelling content. Regional movies across languages also continue to do well. Carry On Jatta 3 has become the highest grossing Punjabi movie to cross 100 crore mark worldwide. Bepan Bhari Deva has become the 4th highest grossing Marathi movie till date. The success of these regional films is a testament to the growing popularity and appeal of diverse storytelling. We remain optimistic about the continued strong performance of regional movies in the coming months. Volatility in Hindi films performance has reduced, and we've seen a quarter-on-quarter improvement in the average collection of Hindi films as well, with mid-scale movies like Zara Hatke, Zara Bachke and Satya Prem Ki Katha performing well at the box office. PVR Inox welcomed 33.9 million guests across our cinemas in Q1 FY24. Coming to the financial results for the quarter, the following numbers are after adjusting for the impact of Ind AS 116 relating to lease accounting. Total revenue for the quarter was 1,324 crores, EBITDA was 100 crores, and PAT loss was 44 crores. Pro forma financials of PVR and Inox combined for the same period last year, where revenue was 1,590 crores, EBITDA was 338 crores, and PAT was 142 crores. As we look ahead to Q2, we are quite optimistic about the robust content lineup across all languages. Over the next couple of months, we have several exciting Hindi movies lined up for the release, like Oh My God 2, Gadar 2, and Dreamgirl 2 in August, and Jawan starring Shah Rukh Khan in September. From Hollywood, we have Meg 2, Blue Beetle, Gran Turismo in August, The Equalizer, The Nun 2, A Haunting in Venice, and Expendables 4 in September, amongst others. From the regional genre, we have Jailer starring Rajnikant, Bhola Shankar starring Chiranjeevi, and King of Kotha starring Dulquer Salman in August, Salah starring Prabhas, and Khushi starring Vijay Deverakonda and Samantha Prabhu in September, amongst others. On the screen openings, PVR INOX opened 31 screens in Q1 FY24 and closed 14 underperforming screens, which form part of the 50 screens that we had guided for closure in line with our strategy to focus on profitable growth and improve unit-level economics. Our screen portfolio, including 38 management screens, stands at 1,707 screens across 361 cinemas in 114 cities in India and Sri Lanka. Now I open the platform for any Q&A. Thanks once again for joining.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abneesh Roy from Newmine Institutional Equities. Please go ahead.
Yeah, thanks. It is Newmine Institutional Equities. I have 3 questions. My first question is on the footfalls. So last 3-4 quarters, we are seeing that number of admits is broadly in the 30 million to 37 million. And now this month and the last few weeks, what we are seeing is word of mouth has also been good and no controversy for the Hindi movies. 3 back-to-back very good Hollywood movies, Oppenheimer, Barbie, MI, etc. So would you say that now we are moving from a, say, 29-33 million to a much more robust number, given Hollywood is also doing well, regional is doing well, South is also reasonably okay, but finally Hindi seems to be doing well, and there has been some delay also. For example, Jawan got delayed by a few months. So is this helping to better have better VFX, better marketing, etc.? So what would be your take on Hindi movie revival and sustainable footfalls in the coming quarters?
I think Kamal would like to answer that, Hindi movies revival.
I think you've, in your question, you've captured all the reasons quite well. And it is definitely, I mean, April, May, June were throwing a lot of positive signals. In the narrative that Mr. Bijli gave, the opening statement, he captured a few films which have done well, and those were very positive signals in the first quarter. We could see the build-up happening, and with the success of the 3 Hollywood films, now Rocky Rani, I think we are all set for a takeoff. We would not like to get into any specific numbers, but Hindi films definitely are finding favor with the audiences. A lot of, and Jawan, like you mentioned, because of VFX and to augment the marketing effort to ensure that they give the best output in terms of a film, a finished product to the audiences, they've taken more time, and I think this augurs well for the exhibition space and also for the film entertainment space on the whole. So it's all looking very positive without getting into specifics in terms of numbers.
So one follow-up I had on the Hollywood, which is doing really well past few weeks. We also have the Hollywood strike, which is happening. So both on the script writer, there's a strike, and also on the main star cast also now joining the strike. Now this could impact. Yes, so this could impact the marketing of the movies. The movies may be ready, but if the marketing doesn't happen, then the release again gets impacted, and next year, in fact, the pipeline gets impacted. So would you be very worried on the Hollywood strike, or you think this will get self-resolved at some stage?
So we believe will get self-resolved at some stage, and that some stage will hopefully be the next, we reckon, 5 to 6 weeks. But that said, this is one of those areas, this is like whether we have no control over this, but we are watching it very carefully. Our sense remains that over the next 4 to 6 weeks, there would be a solution because studios and both the Actor Guild as well as the Writer Association, they're working very closely. A lot of what we are seeing in media is also part of negotiation, but we understand from people we are talking to in the Hollywood that there are, the backroom channels are working at full speed, and there could be a solution at any point in time.
And currently the lineup of Hollywood movies continues to remain very robust. we have, plenty of movies coming. We have Dune 2, Equalizer,
Expendables. There is no delay. Aquaman, Hunger Games. So at this point, there is absolutely no delay. You were the point that you mentioned that with the actors' unavailability for promoting films, that could have an impact. We had the same challenge with Oppenheimer, and we've all seen the kind of results we've got. So fingers crossed, we're watching it very closely, and we will see how the situation unfolds.
So thanks, that's useful. My last question is on the very good scale up in SPH, 9% quarter on quarter versus ATP only 3%. So how much of the work in terms of augmenting Inox in terms of some of the requirements on the F&B side are already done? So what is driving this sharp up move quarter on quarter was much higher than ATP, and how much is the job done in terms of Inox also being brought up? Of course, PVR also, it's a continuous process. Wanted to understand that bit.
So, Abneesh, a lot of work has been done where synergy of F&B is concerned. Lots of the Inox properties now, the menu has been changed. The new SKUs have come into place. And also new items like microwave popcorn, instant popcorn, all those things have been added. To take it further, a few Inox properties also are now selling non-vegetarian food. So whether it is the changing of SKUs of popcorn and Pepsi, Coke, or whether it is introducing new MRP items, or whether it is changing the sales mix, all these have contributed for increase in SPH.
And I would like to add, on the comment you made on the average ticket price, we continue to remain buoyant. We are quite happy with the 3% growth that we've seen in this quarter. You would also appreciate that we are comparing this quarter, which was lacking blockbusters totally, and we're comparing it to Q1 of last financial year, which was full of blockbusters, one after another. And as you know, our ability to charge in terms of ticket price goes up. The willingness of consumers to accept our offering goes up when we have blockbusters and bigger films. We expect second quarter to sort of make up for the average ticket price growth. We remain quite positive on ATP growth as well.
So one very quick follow-up there. So in terms of the F&B and overall what you're doing, I'm seeing a lot of innovation, marketing innovation also being there. For example, in non-prime time, there's 99 rupee samosa and all those which are otherwise much higher. How is the response to that? What are the learnings? And similarly, the 30-minute 1 rupee, I think the cost in terms of seeing trailers. What is the response? What is the learning from there?
Sorry, Alok.
Sorry, please go ahead, Gautam. Please go ahead, Gautam.
There are two. Okay. So on the trailer show, we've got a fantastic response. We are trending close to about 22% occupancy on these shows. And what is most encouraging is that roughly about 40% of the audiences who are coming to watch these trailers are actually being tracked on booking a ticket to watch a film of one of the trailers that they watch. So clearly, this technique is working. It's just that given the fact that it's a trailer show for half an hour, nobody comes all the way to a cinema to watch the show. It's people around the mall and the destination who technically walk in to watch this half an hour show. So that's on the trailer show. On the, what was your other question? On the 99 rupees, yeah, that's doing exceedingly well. In fact, all the chatter around, F&B pricing being too high is completely now mitigated. We've got fantastic strike rates at the cinema. Now consumers are able to club both ticket as well as F&B as a holistic experience cost, and which they are finding it a lot better, and we feel it's very timely done both for weekends as well as for weekdays, and clearly it's showing a great positive move for the F&B.
So thanks. That's all from me. Thank you.
Thank you. Before we take the next question, I'd like to remind all participants to please limit your question to 2 per participants only. You may rejoin the question queue if you have a follow-up. The next question is from the line of Jinesh Joshi from Prabhudas Lilladher. Please go ahead.
Thanks for the opportunity. I have a bookkeeping question. If I look at our convenience fee, it has fallen by about 23% year over year on the pro forma basis. But if my understanding is correct, we typically enter into contracts with the ticket aggregators, and the minimum guarantee is generally amortized over the term of the contract, which essentially means that there should not be a substantial rise or fall in this income. So if you can just explain the reason behind this 23% fall.
Yeah. So two things. One, our contract with BMS came to an end earlier this quarter. So PVR has renegotiated the contract. The contract is more on revenue share basis and not with a minimum guarantee commitment. Secondly, also this is also the first quarter where Inox contract is also consolidated. Inox was already on a revenue share basis. So part of the impact that you see is due to drop in admissions when you compare it with Q1 of last year, and that's partly the reason. And secondly is there is no minimum guarantee. Now it's a pure revenue share contract, which is similar to previous term.
Can you share what is the quantum of our share in this arrangement?
No, we'll not be able to share any specifics, with respect to the contract.
Sure. And sir, my second question is with respect to the debt levels, which were up by about 150 crores on sequential basis. If you can elaborate a bit on this, because if I recollect properly, in the last call you had highlighted that our net debt levels will remain more or less constant, and the CapEx funding will happen via internal accruals. But we have seen the debt levels move by about 150 odd crores. So any reason behind this?
Yeah. So first of all, debt levels have only moved up by 70 crores at a net debt level, not 150 crores. I think our gross debt has moved up, but that is because of our strategy to keep more cash on the balance sheet. So net debt is only up by 70 crores. And we still stick by our guidance that we had given, but there will be quarter-on-quarter volatility. Some quarters, which have, because we are on a capex plan, we are fitting out screens. Some quarters which have a lower EBITDA, you will see, debt level marginally rising. In some quarters where we have, higher EBITDA, you will see debt levels decreasing. But on an annual basis, there is no change.
Sure, sir. Actually, I was referring to the gross debt number, but nonetheless, this helps. So one last question from my side. I mean, we have the Cricket World Cup come up in India in the month of October, and historically we have been airing few matches on the cricket side as well. So any particular contract you are exploring with ICC this time around, or I mean, where are we on that front? If you can just share some thoughts on that.
So yes, we are in process of signing the contract, and we will screen just about any match that we wish to in the tournament. So we will pick on those important matches, and we will be screening those matches, specifically all the India matches.
Sure, sir. Thank you so much, and all the best.
Thank you. The next question is from the line of Arun Prashant from Avendus Spark. Please go ahead. Mr. Arun, ladies and gentlemen, we've lost the line for the current participant. We proceed to the next question from the line of Harit Kapoor from Investor Capital. Please go ahead.
Hi, good afternoon. I just had 2 or 3 questions. One was on the special formats slide that you put in the presentation. Given that experiential films are actually doing even better probably than even pre-COVID levels, is there a view that this 13.5% salience, which is special formats, should be increased further? Just wanted to get your outlook on how you're thinking about this.
Yeah, I mean, these already 13.5%, and as the slide said, 229 screens.
Yeah,
ours have some special format. Definitely, this differentiates us even further from any other format of movie watching. And I think consumers have given their verdict that when they go out and they see, these movies, they become more impactful. As I said, big movies become even bigger. So we are rolling out more and more of these in our various properties which are coming up, and also in some of our existing properties which we're retrofitting and renovating. We are also introducing various formats like IMAX, ICE, 4DX, MX4D, and also Lux Insignia, Director's Cut. So all these special formats, definitely they have further room for growth.
So in terms of your overall mix, this number should keep increasing. Any targets that you have in place in terms of percentage of total screens, maybe 1 year, 2 years out?
No, we don't look at it from that perspective. We look at it very specific to each market and what is the right fit for each market. Obviously, this percentage will grow and would land up anywhere between 15 to 20%. But, very difficult to put a target of very specific number. Because we're very focused on building the right product for each market, but we should get to anything between 15 to 20%.
Got it. The second question is on the cost side. Any expenses incrementally that you want to call out on account of merger, etc. Any cost there in Q1 or what was there in Q4 is just pretty much done with?
Yeah, I think merger-related, pretty much we're done with most of the expenses. So there is no, merger-related expense appearing in Q1.
Got it. And lastly, I just wanted to understand your occupancy math. On your numbers, the occupancies are kind of flattish on a QOQ basis, while footfalls are up more than 10%. Is it only primarily due to higher number of shows, and was that only the impact of June? I just wanted to get your sense on that.
That's correct. We've played higher number of shows this quarter, and that's the reason your occupancy percentage is appearing similar to what it was in Q4. February and March are very slow months for us, and we had cut down a lot of shows during those 2 months. So, yes, we increased the number of shows during this quarter.
Got it. I have some more. I'll come back in the queue. Thank you.
Thank you. The next question is from the line of Jay Doshi from Kotak Securities. Please go ahead.
Yeah. Hi. Thanks for the opportunity. Nikhil, is it possible for you to give us some color in terms of, where are you in the journey of capturing synergies that you had called out? What percentage of that overall target that you had set you've already achieved? And it's my first question. I'll wait for it.
Yeah, I think it's still early days. We've begun a lot of work, on that front. F&B is the first one which has kicked off, and we are seeing some very promising results. We're already seeing some part of the synergy kicking in Q1. But I think more will follow in Q2, Q3, and Q4 later this year as we implement more and more initiatives across the chain. So F&B is completely on track. I think bulk of our ticket price synergy will flow in Q2, Q3, and Q4. Quarter one was, when you compare it to Q1 of last year, it was not possible to get a ticket price increase at that level. But we harmonized, a lot of stuff at the operating level, including harmonizing the programming efforts, ensuring, the shows are programmed quite well, ticket price standardization. All of those initiatives have been implemented on the ground, and they will start reflecting in Q2, Q3, Q4. I think advertising is one number which is currently lagging behind. Once the box office recovery plays out, maybe later half of this year is when that will start kicking in. On the cost front, we are running absolutely on track. In fact, running slightly ahead of what we had thought we'll be able to achieve. And, in Q2, Q3, we will start getting some of these synergies reflected in the bottom line. And maybe later part of this year, we will be sharing an update on where we stand with respect to the synergies.
Understood. Thank you. And second, on the earlier question on cricket, now this World Cup is a one-day format, right? So, for that duration, have you in the past experimented, and what is the kind of traction or demand that you sort of anticipate or foresee?
So we have done many shows for one days, and typically how it works is that we go to corporates who end up sponsoring a certain match, and they are the ones who would call in people. It could be the whole lot of dealers or consumers that they would kind of invite. Some bits of the tickets in the auditorium are also left for us to sell at the box office. So that's how it's largely done. People come and go, and it's like a bit like a carnival or a mela that happens at the cinema. There are face painters and dhol-walas and stuff like that. So we make it out of really like a carnival. And in the past, we've seen some of the key matches garnering some great interest across. And so we'll have to be choosy about the matches we pick up. It can't sort of play out for all the matches, but surely some of the key matches and the India matches will be sort of picked up for screening. And we are 100% sure that we'll get corporate sort of participation for this as well.
That's helpful. Thank you so much.
Thank you. The next question is from the line of Arun Prasad from Avendus Spark. Please go ahead.
Thank you very much for the opportunity. My first question is on the ad revenues. As you mentioned, it is yet to recover completely. Can you just give a high category level commentary on what is lagging, what has recovered? Is this because we have already more or less seen the footfalls coming to normalized levels except for the Hindi? So should we assume this is a normalized level of the ad revenues?
No, clearly not. I think starting Q2, as Nitin had just mentioned, the recovery will clearly be seen. And by Q3, which is also the festive period, we will see fairly normal levels of advertising coming back. Thanks to some of the big releases that happened in the month of July, the overall, the noise level around cinemas is a lot better now, very positive, and we are getting some big accounts back. What was missing has been the absence of some long-term campaigns because of the overall negativity in the market about which films are doing well. Is Bollywood be able to deliver a success or not, and when Hollywood films would do well? All that noise has completely died out now, and we are now over the next 60 to 90 days in the market to close some of the long-term deals. Even sectors like telecom and consumer durable is something that we believe will come back very strongly. And hopefully we'll be able to post some very strong numbers starting Q2.
Okay, so this confidence obviously depends upon the footfalls coming back. Is this the right understanding?
Actually, both. In advertising, more than even footfalls, you need big banner films and you need a certain positivity. The good thing is that happened. Clearly, films which have performed have left a dent with the advertisers to say that they've missed out on an opportunity, and we have the entire teams have kind of used this as an opportunity to create more conversations with clients. So I think the hard work is all done, and now we are ready to reap the benefits of some of the good marketing that has been done by great films over the last couple of months. So we are now on path. It's not as if that we are waiting for any more recovery to happen.
You mentioned long-term deals with the advertisers. Was it the case pre-COVID as well, or it was more like a spot selling?
No, it was always there. We always had about 10, 15 very big clients who would be with us advertising for 8 to 12 months of the year. Those were kind of missing in action so far, and we hope to get them back very soon.
Understood. Right. And my second question is on the box office collection from regional. which seems to be around 20% of the overall regional box office. PVR INOX share is close to around 20s, whereas for Hindi and Hollywood it is almost 50s. What are our plans to address this anomaly, and what are the current bottlenecks we are facing in achieving this?
You repeat your question, please. Your voice was cracking. We couldn't get the question properly. Could you please repeat it?
Right. I was asking, if you see the total regional box office collection and our share of the regional box office, it is close to it's hovering around 20s, whereas in Hollywood and Hindi it is around 50s. What are the steps we are taking to bring this regional box office at par with the share of regional box office at par with the other languages? This was my question.
So that's a very good question. We just need to grow more in the southern territories, the southern films, regional films. And when you say regional, I'm assuming you're referring to the South Indian films, because for Punjabi films, Marathi films, the contribution of PVR INOX, even for Gujarati and Bengali films, contribution of PVR INOX is similar to Hindi. But for southern films, because they penetrate deep, they travel deep into smaller centers, we need to increase our penetration more. That's the roadmap. I would just leave it at that.
But so that means most of we need to go into, say, tier 2, tier 3 cities, but obviously the mall coming up in these, cities or towns is obviously not up to the mark. So this roadblock will always be there, or we can do something about it?
So we've already guided that we are adding a lot of screens in South India. In fact, 40 to 45% of our total screen additions right now are in South India alone. And we will build according to the right opportunity. We are entering new cities, every year. This year we've entered Machilipatnam, is a city which we are entering. We entered Armoor. We've entered in Nizamabad, earlier last year. So a lot of new city additions are happening as we go along, but we wait for the right opportunity to build a PVR property. And even in big cities, we are adding, a lot more cinemas. We just opened, very large 12-screen plex in Bangalore with Prestige in Kanakpura, and that's hit the road running. It's, already performing very well in the first 2 weeks itself. So there is a lot of focus on adding more screens in South India.
Understood. Just one last question on this.
I'm so sorry to interrupt, but may I please request you to rejoin the queue for your follow-up, as we have many people waiting for their turn?
Sure.
Thank you. A reminder to the participants to please limit your question to 2 per participants only. The next question is from the line of Lavanya Tulota from UBS. Please go ahead.
Hi, sir. Thanks for the opportunity. So just bookkeeping questions. I just wanted to check how you see employee cost going ahead in the upcoming quarters, and also the depreciation as you reduce the number of screens going ahead along with the additions.
So employee costs will grow with inflation. We are bound for large part of our workforce with minimum wage, increases. And, from a headcount perspective, at least at a site level, we are at an optimum headcount level. So I don't see any reduction at least at a site level. So that cost will grow with inflation or with minimum wages, as the case may be. At the depreciation level, I don't see any, significant impact. While we are, shutting down screens, most of those screens have come to the end of their life cycle. They're already depreciated to a large extent. So depreciation would only change based on the new screens that we are adding effectively. So no big substantial change other than addition of depreciation of new screens.
Okay. So anything on the no interval high ticket pricing, like a continuous screening, any different kind of offering that you are planning, or no interval, no ad, but at a higher price? something like similar to OTT but a bigger screen experience?
I think not really. Currently, we aren't planning anything, screening without an ad or increasing ticket price on account of no ads. No, that isn't in the pipe.
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Nikhil Garg from BNP Paribas. Please go ahead.
Hi, sir. Thanks for the detailed presentation. I have a couple of questions. One on quarterly results and second which is more structural in nature. On quarterly result, if I look at on a YOY basis, your EBITDA is down like from 300 crores to 100 crores, and this is despite high ATP, F&B spend per head, lower volatility in Hindi movies, and much higher number of Hollywood movies also on a year-on-year basis. So would it be fair to say that, to achieve 300 crores of EBITDA, we would need one all months to fire and probably two big hits every quarter? And if we have one big hit only, like Pathaan in Q4 or Avatar 2 in Q3, then we would be somewhere in middle. So that's my first question.
Yeah. So, the answer to your first question is that, our business is a very high operating leverage business. We run a certain fixed cost structure for all the properties that we have. And, number of footfalls has a direct impact on the overall profitability of the business. When you compare it with Q1 of last year was one of the best quarters ever in the box office history. We had almost 1 crore more footfalls than this quarter, and that reflects the operating leverage, directly on the bottom line. So, obviously Q1 has been a slow quarter. April was a very slow month, and May and June have built up, but we are still trending significantly below on footfalls as compared to, what we did in Q1 of last year or even prior to pandemic. So as the momentum picks up, July has been an excellent month, and as the footfalls increase, the operating leverage due to higher admissions, will reflect directly on the bottom line. So that's broadly, the answer to your question.
Sure. And just to add to this question only on a quarterly result basis. So basically, we could, given the content remains also volatile on a quarter-on-quarter basis, so we could expect, this kind of volatility to continue. I mean, it's not that something structurally has changed for the content to, be, on a improving trajectory from here, and therefore we don't expect the volatility in content going forward.
No, see, we don't have an answer. We can only say that there is a good lineup of content. A lot of, pessimism around Hindi film underperformance, which was there, has been kind of done away with in the last few months. We've seen small to mid-budget films doing quite well. So the volatility in Hindi box office is reduced considerably. The share of negative noise has died down. Films are hitting 100 crore benchmarks, and we have a good lineup ahead. Hollywood film, slate, which was very low last year, has got supplemented. This has been one of the best Hollywood performances over the last few months, and all the films there have been doing exceptionally well. So Hollywood is back both in terms of content availability as well as box office performance. And regional films continue to be a stable fare. Yes, there will be quarter-on-quarter, ups and downs depending upon what content is coming up in each quarter. But we see a lot more stability in all the language content. And, that is reflected in, back-to-back success of last 4 or 5 films, starting from May with Kerala Story, then Zara Hatke, Zara Bachke, followed by, the Kartik Aaryan film, and then MI7, Oppenheimer, Barbie, and Rocky and Rani. So there is a lot of positive sentiment, and this is something that with which we have started the quarter, and hopefully this will continue in August and September.
Sure. So the second question is, have we given a thought on, stopping expansion in metro cities? The reason why I ask is that, for example, if the demand for a particular movie is more than supply for that particular week, then our footfalls move to the second week, which in fact should be more profitable for us, right? Because second week, our distributor share would be lower, and you would get more. But expansion in metros would prevent that. Second, in the scenario where demand is in fact less than the supply for that particular movie, for that particular week, our occupancies in fact take a bigger hit, and therefore our profitability also goes down. So are we thinking something on stopping expansion in the current metros like Delhi, Bangalore, where we already have enough presence, and going more into tier 2, tier 3 towns only?
No, that's not the case. We are not stopping our expansion into metros. And when you talk about going into tier 2 and tier 3, we are already present in whether it's a metro or a tier 1 or a tier 4. So we are present all over. We are present today in 114 cities. So just to tell you that you said that there will be more footfalls in metros. My only answer to that is that today India is a very under-screened nation. We still have about 3.2 multiplex screens per million population and about 8.5 to 9 screens per million population if I add all the screens in the country. So today also there's a lot of opportunity for us to grow, and I don't think that we as a chain will ever stop expansion, whether it's a metro or even in a tier 4.
All right, sir. Thank you very much.
Thank you. The next question is from the line of Rohit Gupta from Fullerton Fund. Please go ahead.
Hi. Thank you. Thanks for taking my question. Based on the current net debt levels, business outlook, and screen addition plans, do you see any need for fundraise, let's say in next 1 year? Thank you.
No, we have no plans to do any fundraising during the next 1 year. As we've guided, we intend to fund all our growth from internal accrual. So there is no plans to any fundraise.
Okay, thank you.
Thank you. The next question is from the line of Abhishek Banerjee from ICICI Securities. Please go ahead.
Yeah. Hi, sir. First question on the revenue sharing contracts, which you have been discussing with a lot of the landlords. Could you give some color on how that is working out, especially now that crowds are back to the theaters?
No, are you talking about existing properties? Are you talking about new properties?
New properties. New properties as well as existing properties if you are managing to renegotiate.
Yeah, so all of that is work in progress. Most of the new properties, are structured on a minimum guarantee or a revenue share basis, whichever is higher. That's broadly the structure of our deals. The minimum guarantees have come down from what they were, and the revenue shares are where they were. So, yeah, we've been quite successful in pretty much, renegotiating most of our, leases for upcoming properties, and have achieved a lot of success. In some of our existing properties which are underperforming where the rental cost is high, we are currently in discussions with some of our landlords and hopeful of, getting some success there as well.
Understood. So, and one more thing on this thing. So, post the merger, I'm sure you would have a lot of properties where there is a significant overlap with the catchment area. So the recent, closures that you announced, will that also be to kind of, reduce the overlap of properties?
Not really. I think from a screening capacity perspective, I think bulk of the screens which we are deciding to shut down are in catchments which are either run down or we built cinemas 10 or 15 years ago. Those malls have become dilapidated and have not become relevant with the passage of time. Or in a lot of cases, those malls cannot also be revived and the properties cannot be revived. So as a result of which, we have decided to shut them down. In some cases, there could be overlap situations as well. But generally, as a principle, I don't think that's the big area for concern and the reason for shutdown of any property.
So overlap is not a concern at all. And areas where we have put an overlap, we do our programming differently. So for any guest, when he does not get a ticket in one particular place, he can walk across or just drive across in a few minutes to the other property. So we're using that to our advantage to have different programming so that a guest is never turned back in a high volume day because of lack of a ticket.
Understood. So, and just one last question. So, regarding what you've seen in this month, July, what would you say? I mean, I know you might not be willing to give out a number, but qualitatively speaking, how would you rate this month in terms of historical trends? Because 60-65% kind of occupancies in English movies, I don't think I've ever heard of that kind of occupancies in this business.
Well, we are always buoyant about the prospects, and sometimes our business has peaks and valleys. There are times when we peak in terms of occupancies, and there are times where films underperform vis-a-vis expectations, and results are not, occupancies and percentages are not as per expectations. So it's difficult to predict, and we've always sort of encouraged our friends in the analyst community to see the business on an annual basis and not on quarter-to-quarter basis, because quarterly occupancies can be fairly volatile. At this point, like we mentioned earlier, we've been seeing positive signals in April, May, June. We look pretty set to take off in terms of admission numbers. So we are fairly positive, fingers crossed. I think we will see numbers, hopefully, that we've not seen before.
Perfect, sir. Thank you so much. Really, best of luck for the next couple of quarters.
Thank you.
Thank you. The next question is from the line of Anurag Dayal from HSBC. Please go ahead.
Yeah, hi. Thank you for taking my question, sir. Could you give some update on the loyalty program, as the loyalty programs for PVR and Inox integrated already, or you have some plans? And what is the membership today? And do you track what percentage of your ticket, at least internally, what percentage of ticket sales come via these loyalty programs, and your plans ahead? Thank you.
So we have close to about 20 million each, members, both for PVR and Inox, so about 40 million in all. However, our current loyalty program is coming towards an end. We have already issued, communication to all the members across PVR and Inox to say that the point-based system is coming towards an end. And towards H2 of the year, we will embark on a new personalized loyalty program, which will really focus on a little more active involvement of the consumer and seeing how we could sort of push the consumer for higher consumption at the cinemas.
Great, sir. Thank you so much. And just one small bookkeeping question. So there has been sequentially 39% jump in electricity and utilities charges. So is there any one-off here, or what's the reason behind it?
No, there is no one-off here. That's the nature of our business. That is due to change in seasonality. We have a lot of properties in North India, and in winters you don't have high air conditioning bills. In summers you have air conditioning bills which are fairly high. So there's nothing. This is quite normal in our business. Q4 is the lowest quarter in terms of electricity consumption. In Q1, Q2, Q3, the electricity consumption is high.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Pulkit Chawla from Emkay Global. Please go ahead.
Yeah. Hi, thanks for the opportunity. So just wanted to get a sense on the Bollywood movie releases. So this quarter you're expecting probably 6 to 7 Bollywood movie releases, and probably the next quarter would be a similar sort of number. Now pre-COVID, the number of Bollywood movie releases per quarter used to be slightly much more higher. So is there concern regarding the number of movies getting released in the first place?
I think the number of films have been fairly steady in all quarters, and they continue to solidify. But our problem in the past has been the quality of films. The success ratio of Hindi films performing at the box office has left a lot to be desired. I think the good news is that the success rate is improving in a noticeable and a firm manner. So thankfully in this quarter and in the subsequent quarter, including third quarter, we have some very strong quality films, compelling content, and fingers crossed again, hopefully the success ratio would also be better than what we've seen in the last few quarters.
Thanks, that's helpful. Thank you.
Thank you. The next question is from the line of Jensen Jacob from Central Insight. Please go ahead.
Hi, thank you for taking my question. My question was on the growth front. This quarter we have only added 18 screens, and could you please throw some light on why these additions have been so low?
Well, I don't think that the additions are low. We have opened 31 new screens in Q1, and in Q2, as we speak, we have opened another 15 screens, and as recently as this afternoon, we opened one in Patna. So overall, we have already opened in this financial year 8 properties and 46 screens, which I don't think is low by any standard. And the target which we have given for opening the number of screens this year will be on target to achieve those.
Okay, so what is the target that you've given as a combined entity?
Well, it's about anything between 150 to 160 to 165 screens. And as I said, we have already opened 46 screens till today, and we are on target for the remaining.
Okay. Thank you. That's from my side.
Thank you. The next question is from the line of Sumit Sarda from Compound Everyday Capital. Please go ahead.
Yeah, thank you. So I appreciate the guidance that you have given that you want to grow only through internal accruals. But I wanted to go a step further and maybe ask that given the content volatility and high fixed cost structure inherent in our business, do we have an aspiration to go zero debt and improve the resilience and robustness of our balance sheet? Thank you.
Yeah, I think that will automatically happen with the passage of time as the operating earnings start kicking in. The focus will be post-growth, whatever is the free cash flow left to reduce the leverage on the balance sheet. That's the way we think about the business.
Okay. So do we have any medium period target, maybe 3-5 years? Would want to do that?
Yeah, I think we should get there in 3 to 5 years. Maybe earlier, depending upon how soon the operating earnings bounce back and what is, the free cash flow generation based on that every year.
Thanks, Lord. That's all I had. All the best.
Thank you. The next question is from the line of Kush Kosrani from Incred Asset Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, I just wanted to ask, a lot of the medium-tier Bollywood films are going towards OTT, and OTTs themselves have started to produce a lot of increase in the budgeted films. So how is it impacting our footfalls as of now, and what's the overall view on the OTT window as well?
Then we always said that OTT and cinema will coexist. And yes, there are movies which are made only for the OTT, and there are some movies which are made for the cinema, and then they come on OTT platform. So it's not that all movies are going to OTT. We always said that for a giant screen experience, for uncompressed sound, for absolutely clear image, larger-than-life movies are there to be entertained only in a cinema hall. Yes, there are a few movies which have taken the OTT route only, but that's the will of the producer, the person who's already made it. But let me tell you, with the footfall we have seen in the last couple of weeks, be it Hindi movies, be it movies in other Indian languages or Hollywood movies, I think that movies are here to stay, and it's only a matter of time before great content again kicks in and people again they come back to the cinema halls.
Sure, sir. And so this does not. So this then increases our This increases our what you could say the dependency on the big budgeted or the higher budgeted films, right, across the languages. In a lean quarter like this was this quarter.
There are other Hindi movies which are not big budget films. Satya Prem Ki Katha is not a very big budget film. So I don't think that comparison is absolutely right. It's movies which are made for the big screen, are released on the big screen, and if the content is good, naturally they'll be great footfall.
Sure. And on the advertisements revenue income side, what would be the YOY comparable growth for us in this quarter?
Last quarter, Q1 we were 93 and we are 89 this time. And again in Q4 we were again 93 crores. So basically it compares to 93 crores to 89 crores this quarter.
And last question, and you don't see there to be a structural impact to the advertisement income, right?
No, it will bounce back very sharply, and we strongly believe in because once cinema starts to sort of deliver footfalls, which it has, and the story is now going out very strongly. We've been out of the game for close to about a couple of quarters during COVID, and this has taken some time for the market to stabilize. We are working very strongly with all the media planners and buyers, and we are hoping for a sharp recovery starting Q2.
Got it, sir. Thank you for patiently answering the questions. Thank you.
Thank you. The next question is from the line of Arun Prashant from Avendus Spark. Please go ahead.
Thanks for the follow-up opportunity. I was about to ask, what is the percentage of screens do you think is currently kind of underperforming and pulling down your overall numbers, which are the candidates for the future closures?
We've already given that guidance that we believe, I think the bottom, 2-3% of our screens is what we intend to shut down, which we don't think are revivable. That number will be between 50 to 60 screens, is broadly what we intend to shut down.
Okay, thanks. My call got disconnected. No issues. Second, just one bookkeeping. The audience who are coming to watch trailers, you said these are part of the footfalls that we are showing in our report, or and part of the ATP and SPH calculation as well?
Yes, they are part of the report, the reported numbers. Yes, they are.
So that means actual ATP excluding this trailer is much higher?
Yes, absolutely.
There will be a marginal difference. Saurabh, you can give the actual number of admissions this quarter on trailer screening.
It's about 4 odd lakhs.
It's about 2.8 lakhs for the
3.8 about. Yeah, about that. Yes.
3.8 lakhs. 3 lakhs.
Is it 3 lakhs, sorry. 3 lakhs.
3 lakhs for the quarter.
3 lakhs for the quarter.
Correct. So my understanding is they may not be contributing to ATP, but obviously they will be contributing to SPH, right?
Yes, a little bit, not as significantly as a movie, consumer does, because they are into the cinema only for about half an hour. But yes, they do end up buying some F&B, but not as significant as a movie consumer. If you were to get this 3 lakhs out, both ATP and SPH would marginally go up.
Understood. Thank you very much.
Thank you.
Thank you very much. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
Yeah. Thank you everyone for taking out time to attend the PVR Q1 earnings call. And if you have any follow-up questions, feel free to reach out to us individually, and we'll be happy to answer your questions on a one-on-one basis. Thanks once again.
Thank you. On behalf of Axis Capital Limited, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.